time came when the ticker tape in the broker's office told a new story. It was panic. 16.5 million shares of stock sold in a single day.
Ladies and gentlemen, welcome to Talk Dirty to Me, the #1 podcast for beginner investors. I'm, of course, Phil Better, the podcast mogul, and with me, as always, are there's two smartest people I know, Mr. Tony Slemensky. I'm always going to mess up your name. From Stock Bros podcast, and Lloyd J. Ross, the millionaire money mentor himself, who hosts the Money Goes on Trees podcast. Guys, how are you doing today?
Doing good. Market's up. Come on.
Good.
Lloyd's happy.
Yeah, it's up big time today, huh?
Yeah. Every storm runs out of rain.
Check that. Yeah.
Good. Huh?
That's how it is. Up and down, up and down, up and down.
Yeah, gotta. As we've said, don't always look at your dailies. Look at your weeklies, or even your monthly portfolio, because the daily will make you depressed sometimes, as it has in the past week and a half. But we got some big news coming on because it was announced a bit earlier, and Tony was a little late announcing it in the group. Tony, I'm disappointed you.
No, actually, to be fair to that person, it was a misunderstanding.
Oh,
They thought it was Alpha, or they saw the article from Alphabet from a couple months ago.
Yeah.
And in the headline he posted, it did say something about Amazon. So like the headline of the article is like, is Amazon next? So it was a little like misleading if you didn't actually read the article. So
yeah, clickbait.
And a lot of people don't realize Google is Alphabet. So I think that's the other thing. Yeah,
it's true. They changed their name like what, two years ago or 2 or 3 years ago?
Yes,
like Facebook did recently, changed it to Meta so that they can have more power stuff. But yeah, Amazon stock split going down. Then we got Facebook. We got inflation. We got the gas prices hitting record high. We got a lot to talk about in this episode. So where do you guys want to start first? Amazon, Facebook?
Well, I do think at one point we have to touch on the big crypto news today as well.
Oh, I completely forgot.
President Biden just signed an executive order.
Oh.
We can go through that. We can go through that later.
What was the executive order?
So they're going to do a study on regulations for crypto, and it said they're going to focus on 6 key areas: consumer protection, financial stability, illicit activity, U.S. competitiveness, and financial inclusions. So, it's going to be, it could be a good thing actually for crypto, because right now it is kind of the wild, wild west, and there are a lot of brokerages that get hacked, and sometimes people don't get their money back. So some regulation isn't a bad thing, I don't think. So it may, but I do think this might be leading, because they did mention it. It might be leading to a Fed coin at some point.
It's only a matter of time.
I don't know. It's just so interesting because I just don't need it. It's not needed.
Now we don't need it, but I think they're planning for the future, because crypto will be in like 50 years the way that people pay. Because you have to remember, we're moving into a more digital age.
No, I understand. I just think it just moves even closer towards
1982
social credit score system.
Yeah. Everything. Look, the government. I was talking with a friend of mine, and he was reading. He's smart and reads a lot of books and a lot of science fiction, and like some of the books talk about how the world then gets broken up into 8 companies controlling the world. There's no more governments. It's just 8 companies, and people just work for those companies. And with what Starlink just did in the Ukraine for sharing internet there, it just shows that we're moving towards something more like that than anything else.
Yeah.
You have one guy controlling the internet. Like, it's coming that governments are going to fall, and we're going to have a new type of governance, if you will. And
Yeah.
Well, I think this cryptocurrency thing that is going on right now, where they're kind of focusing heavy on this more than ever before, is because they're so worried about what's Russia circumventing these sanctions
sanctions, yeah.
with, yeah. So they're thinking that they're going to use Bitcoin to get around it. So they're trying to like do studies, and I don't know if anything will actually come of this because we know how much government
Takes.
panels are created and government committees are created,
Don't forget they have to create subcommittees for the committees,
yeah,
and then subcommittees.
investigate. Yeah, they'll need a committee to investigate the committee to investigate that committee, and then it's going to
They
go
they,
on and
they
on.
should they should just be in place to uphold the Constitution in terms of the legislature, and also manage the revenue and incomes and outgoings of the country. That's it. They shouldn't flip and meddle over government.
They're calling, so they're saying is they want to create, or they're focusing on protecting consumers. It's an important part of this
Well,
executive order.
to
They
that
always want to
point,
protect us, always.
to that point, it's because there's been a lot of influencers in the U.S. who have
Yeah.
done pump and dump schemes.
Matt
and one of the-
Damon.
well, not just Matt Damon, but I'm talking like Logan Paul, Jake Paul.
Yeah.
They made like, I know Jake Paul is currently being sued for his connection with a SafeMoon scam or something like that with his secret wallets and all
I
that.
didn't
So
hear that.
yeah, just saw that
The
on
thing is,
Phil.
though, the government can find out, like, if they work with the brokerage could give them access to any of
Yeah.
this information. I mean, when you sign up for a brokerage account through crypto, you have to give your social security number, just
Mhm.
like you do with a regular brokerage account. Like when I signed up for Coinbase or Public or any of these other accounts, I had to give my social security number so they can trace it back to whose account it is,
Yeah, it's
which is already happening actually with Coinbase.
Yeah. I just don't know if it really solves a big world problem.
I think they're trying to stem a problem from being created from the crypto. I think that's what they're
Yeah.
trying to do. They're trying
Yeah.
to forecast what problems are going to happen before it happens, and then when we get to that point, we're going to be like, well, these are limiting. We need to remove these.
I kind of get the point of having a stable coin like a USD coin that is actually pegged to the actual amount of cash in circulation. But so like these USD coins through like Tether and these other companies, in theory, they're supposed to have a bank account, and they do get audited. They're supposed to have, if you have 1,000 USD coins in circulation, you have to have 1,000 USD, solid dollars in a savings account or somewhere in a safe. So in theory, it should be a good way to prevent like crazy amounts of inflation, and it follows the dollar, so it doesn't move as much as crypto.
But they can't do that.
Because the dollar is we're adding money to it constantly.
Well, the reason for that though is because we can't pay our debts back. So like, well, not I'm saying the USA. But
yeah, keep us on it. We're international, Lloyd. We don't
like, so this is really good. If I don't know if you've seen Ray Dalio talk about it in his new book, but it's not something new. The Dutch printed money to pay, instead of paying their debts, they just printed money because that was the reserve currency. I forget what the name of the currency was called. Forget what it's called. But they printed their way there, and then what happened was they in the 1600s with the tulip bubble, same thing.
Oh, God,
it was extreme like comfort. So like there was, everyone was comfortable. There was a lot of money. No one worked anymore. So this happens with empires. And then the British come along and they could build boats for cheaper, and they could build a navy for cheaper, and they had cheaper labor. And then they actually built more boats, and they beat the Dutch navy, and they become the superpower. And then the pound was the reserve currency. And then they did the same thing. They became really successful, comfortable. Then they printed money every time they needed to pay debt. They would print money. That's how any reserve currency can print money. Mm-hmm. But then what happens is it starts to go through what we're experiencing now, which is this massive, heady 1920s experience where it's just so much money around, right? And so what happens is
they can print money and give out treasury bonds.
The US then overtook the British Empire. They became the superpower. The reserve currency is USD. And it might be that the RMB becomes a reserve currency and China becomes a superpower and the empire of the United States falls away. You got to watch Ray Dalio's.
How
there's
dare you?
There's a YouTube. There's a
As we
YouTube.
talk,
Yeah, empires. I don't know how it works, but it's historically that's the way it is. It's you look at the way the United States is managing things. This is dreadful. And so there comes a time where there's new power. Because look, it's cheaper to do things in China. They work harder. They work longer. They don't
have labor laws like the U.S. and most of the civilized world have.
The USA used to have no labor laws either. When it was coming up as a superpower, it was different. It was hungry. It was, like it's not like that anymore.
Well, China is such a closed off country, though. Like, I mean, not for exports and imports and stuff like that, but they're very closed-minded and they hide a lot of shit from their people. But we're starting to trend in that direction too here with censoring everything. But but the thing is, like, you can't just sanction. That's why if China decides they want to take over Taiwan, they could do it tomorrow, and we'll do nothing because we can't sanction China like we are with Russia. Because I could walk around my house and 75% of everything here is made by China. So
well, you can sanction. No, you can sanction China because their trade is in USD. And what's happening with China? The reason they
hurt us more than
the
Russia.
reason why China isn't invading Taiwan is because the USD is a reserve currency. And what's happening with China? And there's this interesting plan that I think it has a chance of being real. Is that the reason why the COVID virus was released and the reason why Russia is attacking Ukraine is, they reckon, is to hyperinflate the US dollar out of existence. Because the only way China can invade Taiwan is if the RMB is the reserve world currency, because then they can't get sanctioned against, they can't do anything. And what China's currently doing, if you go read up on it, they're actually trading in gold now instead of USD because they're trying to get away from trading in USD. But the USD is so ingrained in the society as a reserve currency, it's very challenging for them to do. But that's what's stopping them becoming the superpower. The superpower takes the reserve currency.
Yeah, but the biggest problem they have is oil is traded in USD, which is such a huge advantage.
Well, but see, oil from Russia might be traded in gold.
When you control energy, you control so much. You control economy.
Yeah, you control everything. John D. Rockefeller was trying to prove that, and now Elon's kind of doing the same thing. But
China's also banning cryptocurrencies because they don't want any competition.
Yeah, because their plan is to become the next. Like I saw something on Joe Rogan. As much as I somewhat don't enjoy him, but he had a former intelligence agent on the show talking about China's plan for 2045. How they're planning to become the next superpower by doing this.
I know what Lloyd's saying. They do have a long plan.
They've been around a bit longer than the U.S. and North America.
It's not just that, though. I think they're taking principles that have worked from both sides and effectively created something that's never been done in history before. No civilization has created that much wealth in that time frame ever.
No,
ever. Not even the United States. So I think the United States and China ought to get along. I think that makes a lot of sense. But you watch this Ray Dalio Empires. It's called I forget what it's called. His new book, but he does this video on it. I'll share it in the
chat.
I'll share it in here. I'll try and find it and share it in the chat.
It does suck that we have to be like, we have to watch out for the Chinese. We have to rush out for the Russian. It's like we can't just all get along, man.
There's
too much
reasons.
conflict. Yeah, well, there's too much ancient conflict in Europe. Like Europe is just so much older and so much history of battles and wars.
But there's also various cultures coming together. It's a very mixed culture place, and you different values, and it's
There's so many countries in one continent. And we don't have that problem.
No, it's good, but
it's I mean, we're bordered by Mexico and Canada. So it's
quiet puck-loving Canadians up north who, if you fuck with our hockey, then we get mad. Or Tim Hortons. Apart from that, don't mind. We're quiet.
And by the way, Tim Hortons, like when I was living in Canada, is the worst coffee in the world. So
you watch your mouth, sir. That's a Canadian institution.
If you come to Australia, all the Canucks are coming, all the Yanks going like, "Oh my god, your coffee's amazing." I'm like, "Yeah, that Tim Hortons."
Okay, look,
Bro, have
it's
you tried
because a
Dunkin'
Brazilian company
Donuts?
took over Tim Hortons and they changed out. McDonald's now has better coffee because they used to have
Phil,
the Tim Hortons people. Okay.
I still haven't sent you the bread. It's on my to do. I've been delayed, but the bread here, I'm going to send you bread.
Yes, I want the bread. I talked
Tony,
about that.
Tony, send me your address. I'll send you some Australian bread.
Maria is
And just so you
agreeing
know,
with
the
you. Tim
coffee's
Hortons
the
is
same as
bad.
the bread. Anyway, I'm going off topic here.
All right.
Ray Dalio.
But yeah, guys,
Can-
let us know what you think about if the US creates a cryptocurrency or is China going to become the reserve. Let us know in the chat so that we can comment on it, or any questions you have about that. We'll try and get that to you. And let us know where you're coming from if you're watching live or you're doing the replay. And Lloydie has just shared it with me. So I'll put this in the chat for you guys to be able to watch it. And so it's in the chat. If you're watching the replay, it's going to pop up. But yeah, that's the Ray Dalio video Lloyd was talking about.
I come onto the show and I'm like, US is going down. Tim Hortons.
You're
I'm
like,
like,
boom.
I'm creating war.
We're gonna start a war in this place.
Well, I
Yeah.
think what you were touching on is, and it makes a lot of sense, is crypto doesn't really do anything. There's no like use for it really. It doesn't really solve anything. But I think
It-
the hope of crypto is the fear of what you're saying is the U.S. currency could become worthless, and the idea is crypto is decentralized and it's not tied to any one country. So in theory, it wouldn't collapse like a currency could in one country. In
Yeah,
theory,
and that means we can't create more debt and we can't print money, which means we can't expand at the GDP of 4% every year. We actually have to go through long recessions.
fuck you. No, we will print more money and we will never have a recession.
Ever. It's so funny. It's like, no, we never pay back debt. It's the weirdest thing. It's like, anyway.
If we have a bad year, people are like, "Oh, the economy's fucked." we're
I
fucked."
know.
Because they don't.
I know.
It's like we haven't had a bad year in like 12 years. So
Yeah.
yeah.
Even then, really since the 30s.
Look at us getting a
It
whole
was
bunch of
pretty
people
bad.
from over the
I mean,
US.
people lost like 40-50% of their 401ks and shit. But
Yeah. Yeah. 08 was bad. Anyway.
it was really bad.
Let's not have a repeat of 08. Let's go to Amazon. Amazon announced today or this week that they're doing a 20-to-1 stock split. How can that help us? How should we be fearful? Should we be happy about that? What's going on, you guys?
It's irrelevant.
Irrelevant. Okay.
It's irrelevant. It's a relevant conversation because it just creates a little bit more liquidity and that's it. Yeah.
It makes it easier for brokerages that don't offer fractional shares for those investors to buy, which we talked about in the past. It's surprisingly, there's a lot of brokerages that don't offer fractional shares. So, a new investor coming in isn't going to buy Amazon for $2,500, but they might buy it for $200. So
yeah, I think psychologically there's a bias that happens when
there's a bump. Yeah,
there's a bump because it's this inexperienced retail investors going, oh, now I've got more stocks, so I own more. It's just, yeah. So.
I think it's good for the S&P that Amazon and Google are splitting because that's just going to drive up the S&P index a little bit.
Well, there'll be more investors and more activity maybe around those two companies, but I love that Berkshire Hathaway has never had a stock split.
No, they just
they have their B
level.
shares though.
Yeah, but that's not a stock split.
Yeah. I love that.
But that's their affordable shares. Yeah.
They're peasant shares as it is, and it's already expensive for us.
I really want to class A.
A is Lloyd's shares. So
yeah, me and Tony are getting B. Lloyd will have the A.
I would love an A class share and just like frame it, get the actual stock certificate and put it on a frame and be cool.
Well, when you sell Baba in 5 years, if it doesn't go out of business and you get that 10-bagger, it's not looking good for Baba. Now they're offering people to. Did you see they're offering buyouts at $113 a share?
I saw that the Ant IPO is now not happening. So it owns 38 billion of value of Ant, and it's not gonna. So I think they'll spin that off or they'll sell that. They've got a lot of businesses they can sell. If it gets low enough, they might privatize it. Don't know, but it's a really fucking cheap company.
Lloyd's like, buy it, bring up the stock, come on.
I just think, yeah, if you look at the competitive environment of its competitors in China versus the competitors that those big tech companies have in the United States, it's miles ahead in its leadership, and it's cheap. It's
I
cheap.
feel like that this is exactly why China's never going to have the world reserve currency because they just fuck with their businesses. They fuck with everything. They don't like they literally and in America our businesses fuck with our government. It's like the
Well, I
opposite.
think the government fucks with businesses. If you look at Facebook's history,
Yeah,
and
but Facebook and these companies get these people elected too by
yeah, but
lobbyists and
well, fucking John D. Rockefeller, Standard Oil, great American capitalist, probably the greatest ever, got fucked by the government. Completely fucked. They split his company up into Mobil, Chevron, fucking. He got monopolistic. So it's happened in US history. They're doing the same thing in China because it's not good for the
not
fucking
to this
people.
extent with Baba. They're literally
Worse,
making him
way
put out
worse, way worse. They
they're
did it way
making him
worse
put
than
out
that.
hostage videos. You don't see Mark
Nah,
Zuckerberg putting out a hostage video by a tree like I am okay. Everything is fine.
yeah, I think
No, he
that's.
gets
I think it's
dragged to
conjecture.
Congress.
I was
I think it's
on
conjecture.
vacation.
I think it's conjecture,
It
but I
was
also think
training
that
camp.
there needs to be a villain in a story, and I think yeah, propaganda from both sides. But I just feel like it's too that business is too ingrained in the actual economy to. It's just too ingrained. People
Yeah,
use
it's
it.
like it's in every part of their every sector.
I
They're
know
doing
that's what's
something.
crazy that they're just fucking with it so much.
Well, I don't know if they're doing it on purpose to kill it. I think they're just doing it because it was too monopolistic.
It was too
But
powerful,
Yeah.
and they were
we'll
scared that
see.
it was going to be overthrow the government. Because if with Jack Ma having all that power, he could be like he could start doing like propaganda against the government, and then you have what's going
If
like
he just kept his mouth shut, Alibaba would be at like 300 a share right now.
But that wouldn't help me. That wouldn't help any. Like
I know.
if Jack Ma had kept his mouth shut, I wouldn't own Alibaba.
What do you think? Do you think they're going to replace Jack Ma and then they'll
No,
refund it?
Jack Ma left as the CEO in 2018.
But
He's
he
long
still
gone.
has all. But how much ownership does he have of it?
Yeah, he has ownership, but
Yeah.
I don't think they're
All
gonna
they got to
personally.
do is bring in a communist-friendly owner, and then that thing's going to skyrocket again.
There'll be some things that will change around, and when it does, it'll roll back up to $300 a share. I look at JD, right? Its main competitor. It is a 38% market leader, right? Alibaba is the biggest at 55%, I think. JD is 35%. JD has got a multiple that's arguably similar to like fucking Costco. Like JD and all these other Tencent, fine. Ain't no talking about VIE structure. It's just Alibaba. I don't know why.
Yeah, it is crazy.
So
It is really crazy.
I think it's going to be fine. But you really pay a higher price for a cheery consensus. And I'll give you an example of that. A few months ago, fucking every brokerage, all the billionaire investors were backing Facebook. Facebook this, Facebook that, it's going to do this, going to crush earnings. Bosch falls by 50% in a matter of weeks. Worse than Bubba. Fucking way worse. And people are like now, oh shit, now I'm second guessing it, which means they didn't really understand the company to start with. But now it's where you want to you pay a hefty price for a real confident, happy, rainbows, smiles business. You do. Everyone was paying $350 a share for Facebook, right?
Mm-hmm.
They were paying out their ass, and that killed them. So when you're trying to invest, you want to go when the company's on the operating table. And that's when Warren bought American Express. He bought Coca-Cola when it brought out New Coke and fucked itself. He bought it then. He bought the Washington Post when it was just drowning. He bought
Geico.
he bought Bank of America when it was on its knees, thinking, "Fuck, we don't have money. We're finished." It's when he bought it, convertible notes. Yeah, he just buys them when they're like great businesses. He knows I'm going to die. So if you go and buy Facebook now, you're probably going to get the whole metaverse business for free, because it's currently valued at a valuation that dictates that it's currently cheap just based on its advertising business. So whether the metaverse plays out or not is fucking irrelevant. It actually means nothing. Mark's just probably tinkering around. It's probably more of a distraction than anything. The business is so cheap. It's a 13, 12 times multiple on a business growing its revenue. Like,
Yeah.
it's a machine. Its free cash flow growth is insane. It's actually one of the top 5, 6 best businesses in the world. That's when you
We
buy.
are in a bear market. Everything is just fucking crazy right now. So there's so much chaos going on, and I think that has if we hit a bull run again, I think Facebook's gonna pop. I really do. I think it'll be back up pretty quick. I don't know if
It's like,
it'll go back to where it was, but it'll go up.
I think it's a double. I think it will double from here to $400 a share over the next 2 years, 3 years. And that's a great, like 20, 30% compounded rate of return. It's going to beat the index by double at least. So that's how you invest. You got to take these swings. I don't think people understand this. If you don't swing like this at these opportunities, you'll never be rich. And they'll be like, oh, what if I lose my money? I'm like, it's fucking, if you only got a bit of money, it's almost like having none. What's the point? You want to swing at this. This is a fucking great company. It's not going to go broke.
Yeah.
I think they're going to be fine. And you can sell it after it doubles if you want. Doesn't mean it's going to like kill it for the next 30 years. I don't know, but it's certainly very less risky now than what it was at $350 a share. It's less risky.
Yeah, I thought it was kind of crazy at $350 a share, but
Yeah.
I mean now it's just. I thought it was I was buying it at $200 a share when it was dropping like a rock. But
still, it's an amazing buy at 190 where it sits now. But this is how you have to do it, and then you can't expect to go up too quickly. It'll take time, and like with the likes of Alibaba, it's much the same because that business gets to a point where it drops so much in price, the free cash flow repurchases every single share in a 3-year period. It's ridiculous. Like, really? You want to see your share rocket? You watch it take its free cash flow and buy all of its own shares back. There's this really interesting book called The Insiders. Warren Buffett's read it, where I heard from it years ago. I read it. And there's this company called Teledyne. And it was run by this CEO, famous US CEO, really clever guy, great capital manager. Anyway, Teledyne's pumping all this free cash flow, and this stock is fucking falling like a stone, like full on, brutally falling. It gets down to like $6 a share. This dude takes all the free cash flow, buys all the shares, even goes and gets debt at a cheap price and buys all the equity. You go and look at Teledyne. It's a really famous story. And you look at the share price growth after that, it fucking like 30, 40 X's or 100 X. Just fuck. So when you buy all the equity back with your free cash flow at a cheap price, you're actually making one of the best investments ever because you know the company inside and out. That's why share repurchases are really important. And it wouldn't surprise me if Facebook comes and just goes, you know what, fuck it then. We'll just go and buy all our shares back because they're cheap. Warren Buffett just did it with Berkshire Hathaway. He spent $50 billion on share buybacks in the last 2 years. And Berkshire Hathaway recently went from 270 to 330 like that.
Yeah.
You watch this stock fucking explode.
Here's my question, Lloyd. Here's my question. Do you think they would buy back all the shares and return to being a private company?
Well, they're still public, but they're still public.
Well, no, because like Virgin did the same thing. Richard Branson bought all the shares back because he was annoyed with dealing with a board of directors for Virgin. Do you think? Yeah. Do you think Facebook will privatize again?
No. I wouldn't say. I'm saying that it'll continue to buy heavily its marketed stocks, its public stocks, drastically. And when it does that, it doesn't have to buy them all back for it to spike. It just buys enough back. You go. It then becomes a stupid price. It's like you're getting a ton of cash because every investment basically is this: how much money do I outlay now to how much cash flow do I get into the future? That's it. That's the only principle to worry about. And that's why Warren Buffett, Charlie Munger, and all the best investors, they look at free cash flow. They don't give a shit about anything else because it's really, it's irrelevant. It's like, if I put my billions into here, when will I get my billions back in actual cash? Not brand equity and fucking future growth, nothing of that. Just cash. That's how they invest. And if you do that, it's like buying a real estate like a property. It gets cheap enough. It's stupid. You're like, this is the greatest deal ever. I can buy $100,000 property and get $100,000 in income a year. Would you buy a property that was $100,000 if you gave you $100,000 a year in income?
Yes.
Yeah, that's companies like they get cheap enough. That's what it's like. But property doesn't ever get that cheap. It's too.
No, it just gets more and more expensive.
Yeah, but it's much the same. You do it for cash flow. Anyway,
It's
Rant over.
it's that's why we love having you, because you have these insights that we don't have, because you're at a next level of investing than most of us. Plus,
Yeah,
you've done years of studying by reading and
yeah.
increasing your IQ and your not financial IQ, and that's why I
I
love
think,
your show. Money
yeah,
grows on trees. It's a master class, ladies and gentlemen. It's a master class. I am so happy that Lloyd actually pays me to listen to his show, so I can put it out for everybody else. I get a master class every month before everybody else. Like 2 hours worth of Lloyd
you could do
telling me.
Facebook Lives on what you learn before it comes out.
Yeah, I get to learn. I implement it, and I'm good to go.
They
And then you have your
really,
new
yeah.
show coming out, which is even better. But we won't talk about that right now. Maybe we will later. But what are we moving on to, guys? What do
Need
you want to talk
to.
about?
Hey,
People
listen,
really
what?
just need to increase their cash flow, man, or their income. If you could do that, you can take chances on companies, you know.
Yeah, I think that
But
you're right. You're right. It, yeah.
I,
It's
I
like,
have I have advice from some. So I think a lot of people they don't most. I mean, the average savings account in America is like a couple $1,000s, the median account, right? Some people have a lot more. Most people don't. Most people have a lot less. So when I was starting out, I don't know, I was like 27. I is when I had like I don't know, 10, $15,000 in savings. And I started out investing and buying like stocks and whatnot. And I didn't really know what I was doing. And I'm just throwing $100 into this, $100 into this, $100. No, just totally lost buying shit, not really understand what I'm doing. Then I realized like, okay, I'm going to switch to indexes and I'm going to build up an index portfolio. Then I built up a five-figure portfolio, all indexes, right? So, I got to $10,000 with indexes. Then I started buying stocks, like putting a couple thousand of this, couple thousand of that. But majority of my portfolio is all index funds, right? And I think a lot of people they start out, they don't have a lot of money and they're trying to find like a quick hitting, like, if I buy this 2 cent a share, penny stock that I don't even know anything about, someone told me about it, I'm
yeah,
gonna 20x my money and this and that.
yeah,
And they're trying for that get rich quick thing. But my advice would be save $10,000 in a savings account. And then you can start investing because now you don't need any of that money that you're putting into the stock market. You can afford to let it sit for a long time. A lot of people, they're selling out quick, they're panicking or whatever they own because they don't have, in case something happens, they don't have the money. They have to pull it out of the stock market. So save 10,000. It's not a lot of money, but if you start out with saving 10 grand, you can handle any like emergency that comes up. Personally, now I have a lot more than that just because I was going to buy a house and do other things, but whatever, it didn't work out because of COVID and whatnot. But then once you have that base of 10,000, you can start investing and invest up to 10,000 in index funds. Then when you get to that, then start buying individual stocks and taking more chance. That would be my advice. I just think it's so easy to get lost and
yeah,
confused when
yeah. I think especially when you're a beginner and you don't have the knowledge, it's not something you just instantly click with or get. Like
yeah.
everyone's like forever learning. Even Charlie Munger and Warren Buffett are like, shivers, we need to get away from this grand model of buying net asset companies and start looking at growth companies as well. And that's what
Yeah.
Charlie. So we're all learning. You have to continually learn. One of the things I learned in the last 2 years was if I'm going to be rich, I'm not going to. I need to start backing myself because when you buy a share of a company, particularly companies like even Facebook or Apple or right, and they're marked down because they're going through some shit or there's a Russian war on whatever, you've got to realize that it's companies of high quality. They don't just disappear overnight. Like you're probably not just going to lose all your money.
No.
Even Kodak and stuff that was like, there was signs like it was going bad and you can sell. You don't just like fucking get liquidated. And I think once you understand that, most of the time when you're investing in individual companies, it's really safe. And I just don't think people get that. So they get so sold this diversification thing so much that it actually diversifies away all their fucking gains. And they go, and you know what? 10% a year is great. So if you want to do that, good, stick with it, you'll do well. But I want to do better than well.
Yeah.
And
Yeah.
I just think you can. if you learn, and you can learn tons off YouTube, man, like just listen to Warren and Charlie, and Manish Prabhai is amazing. You listen to him, he just has so much insight. But you have to learn how to read financial statements. You have to understand like some basic numbers and ratios and things. There is work to do. But I know that this happened to me. I'm like, fuck, I need to swing bigger at these great companies because they're not just going to get liquidated.
And that's the thing. Like you can take. That's what I mean. You could take chances if you have that cushion of 10 grand, right? And then anything you save after that, like
Yeah.
I have like 45,000 in cash that I could use for stocks, and I'm just waiting for something.
Yeah.
You know, I was going to buy a house. I was going to buy a house with this, but I'm
It
just
could be
waiting for
Facebook,
something.
man.
It could be, but I also have like I don't know, tens of thousands in index funds between like retirement and uh, you know, all my other accounts, like I don't know, 50,000 of index funds and a couple stocks. So I don't really care if one of those stock, if I put a bunch of money in something and it takes years to go
Yeah.
up, it's not going to really. I don't need to pull the money out. And I
Yeah.
think you have to get yourself to that point in order to take those chances.
Oh, yeah.
Where the money you're putting in you don't need, and it's hard to do that. It's really hard to do that. And like it's going to take a couple years to do that, but when you get to that point, you know, then you can afford to do things like that, like what you're doing with Baba. You have all this money
Well,
in Baba and it just keeps dropping, but you could put more in and it doesn't matter because you're okay, you're financially secure. You know,
well, it
you could
kind of matters.
wait 5 years.
It still hurts. It still
It still
hurts.
matters. But I know what you're saying. Like, you can have the patience to wait. That's why I don't buy options,
Still
and that's
pay
why I
your
don't
rent
sell
and
short.
your bills. Yeah.
Yeah. That's why
Yeah.
I don't pay. That's why I don't do options, margin, or sell
Yeah.
short. Is because you don't have the luxury of patience then, and you don't have the luxury of time. Where if you buy shares, you're good. You especially if it's a high quality company. But here's the other thing, is that you look at when you buy a share, you've got to look at the downsides. Like, well, what's the worst case scenario here? And let's use Bubba as an example. The worst case scenario is they fucking nationalize the company, right? But there's ramifications and consequences to massive decisions like that. So here's an example. If that happens, all of the liquidity and capital in Chinese companies evaporates overnight. And that would spiral the entire country into a fucking abyss. And I think about that, thinking, hang on a second, are the Chinese people that fucking stupid that they would actually nationalize their best company, and all the companies on the United States Stock Exchange would just get they would just liquefy. They would just literally go out of business, and that would actually cause a fucking massive catastrophe in China. And I just don't think they're going to play those. I just don't think that it doesn't make any sense. Now, am I prepared to lose 400 or 500 grand on that stupid decision? Yeah, because I think, well, I only lost 400 grand. I learned my lesson, but they're fucked. Like,
Yeah.
they're going
You
to
only
lose fucking trillions.
You're okay with that.
I'm
They're
okay
fucking
with that. They're
patient.
going to lose trillions and maybe start a war. I mean, it's bad. So I'm like, I'm okay with maybe that not happening. But if I look at Facebook, it's the same thing. I go, hang on a second. Like, if Facebook went out, I know people whinge about it and carry on, but literally, if that was actually like, if it died today, and that happened when the apps went out, my whole business would be fucked. Like, we couldn't do what we're doing here.
Nope.
Like, how many businesses rely on Facebook? Like, my 2 businesses, I would be gone. We still have the podcast on Spotify, but
Yeah.
but
And
everything else,
Apple and the other platforms. So we're
that's
safe
right.
there.
But everything else would be gone. So I'm like, well, am I prepared to bet my money on Facebook? I already am. Tony talks about you have security and rent and income. I have that because of Facebook. So let's think about that.
Yeah.
Like, that's why
Yeah.
when you look at an investment, you have to be very smart in terms of like, let's look at this whole thing from a different perspective. Let's flip it on its head a bit. It's not a
Yeah.
stock. It's a fucking business that all of my livelihood depends on, and all of our livelihoods probably depend on. Are we prepared to bet some money on that? Yeah. Because if we don't, then we're betting against ourselves.
Well, it always drives me crazy when people in our group comment like Facebook's done. Facebook. It's like you're saying that while on Facebook in a
Yeah.
Facebook group that you're on all the time.
Yeah.
So like it would hurt everybody if Facebook disappeared. It would hurt everybody.
Oh, it
Everybody
would
would
be.
feel it.
Yeah. And I think that, yeah.
And why can't you have both? Why can't you have Facebook and TikTok and Instagram? People have all of them. You don't
Yeah.
just have one. They're like, why?
Yeah.
Why is it one or the other? That's what's funny about it.
Well,
You
this
know
will
what I
blow
mean?
people. This will like Facebook is still the biggest app. I don't give a fuck.
Yeah.
It's still got the most people.
3.9
Eh,
billion people.
It's fucking so it doesn't something like that just doesn't like 3.9 billion just leave. It has all these things in investing parlance called network effects. The moat is network effects. It's powerful because of its network, and its network is powerful because of that. It's this.
I think it's people looking at Facebook, comparing it to TikTok and Snapchat as a social media company, and Facebook is so much more than a.
It left social media as a social media company years ago.
It's so much more than a social media company.
Yeah, of course it is. It's a data. It's the best data company in the world, but also it's got the #1 most downloadable app in the world, which is Instagram. It fucking shits on TikTok. I don't know what people are so flipping out about. Like,
we don't even know how much money TikTok actually makes. We can't. Like, can we look that up? Can we look up?
Give me a second. Let me bring that up.
They're a private company, right? You can't even. We don't even know what their revenue is. They might not even have positive revenue. We don't. We have no idea.
Anyway, I think that listen, someone said in the chat, Facebook's, you have to want to buy it as low as possible. Here's the thing: when you see value, back the truck up and buy. You'll never pick the bottom. People who pick bottoms get smelly fingers. You're never going to do it. And if it falls below 190, keep buying some more. I can't see it falling down to like 100 because it means its cash flow is so ridiculously ridiculous. You could margin it up probably and win. I just think now is the time. It's the most pessimistic.
So I found this. So ByteDance is the company that owns TikTok. And apparently their revenue doubled from previous year to 34.3 billion. Apparently, this is from what the Wall Street Journal is saying. I can't confirm it. There's saying here, slow. People familiar with the math. I don't know if this is actual because it's a private company and it's in China, so we don't know.
It's a private company and it's in China, so that could be totally fake. We have no proof of anything.
You know what? I think it's great these companies like TikTok pop up because Facebook just takes it and just copies it.
Yeah.
So I think it's actually these companies that pop up in competition, they're an opportunity before they become a threat. So it's an opportunity for Facebook to evolve its products, which it has on Reels on Facebook, which is launched. It's just copying these guys. It copied Snapchat Stories feature and just made it amazing.
They're not even the same thing anyway. They're not the same thing. We're not doing things. We're not running Facebook groups on Snapchat.
No, we're not. It's Facebook Marketplace, Facebook groups. Then there's it owns WhatsApp that hasn't monetized yet. It owns Instagram, it hasn't monetized.
But it kind of has Instagram monetized Instagram with their sponsored posts.
They've started doing what TikTok does, which is like paying their influencers directly for the content.
Yeah.
Don't you think there's a lot of people that are like, fuck Facebook, I'm on Instagram, that don't even realize Instagram is
100%.
So many people don't even know that. No idea.
Almost all of them think that.
Like Facebook has 3 of the most powerful apps with Facebook. Well, Meta has 3 of the most powerful. They have Facebook, they have Instagram, and they have WhatsApp. And they Messenger, which you can, if you don't even have Facebook, you can have a Messenger. And there's so much power just in the Messenger app because you have companies like Chatmatic, you have ManyChats, and all these things that use Facebook Messenger to connect with people.
And if you think for a
Ford,
second,
I'm going to go buy a Jaguar, and it's like, Ford makes Jaguar. They own it.
Yeah. If you think for a second that TikTok and these other competitors are not going to have privacy problems with all the shit, of course they are. They're going to get sued. They're going to get the same shit. It's a regulation across an industry. You can't escape it. So I just think,
there was a lot of talk about banning TikTok in the U.S. Even Biden was talking about that. It wasn't just a Trump thing. Because they did a study on it, and they said TikTok is the most intrusive app they've ever seen of any app ever created, meaning like all the data it collects from people and how it was accessing iPhone's notepads and all the shit that it was very shady stuff.
Yeah. But I also see, if you've been on TikTok before, if I get on TikTok, it's got the most horrific human beings on it. Like if you do a post on TikTok, you get fucking raped. Like haters beyond
I
haters,
don't even
beyond haters.
understand.
The algorithm.
I've never used it,
So
but
you guys don't get that on the others. Like Facebook's actually done a really good job of actually policing. They're doing even a better job now of policing the wankers. Like you can't just say it's getting better.
It's going to take
Well,
time before they get to the point where they can figure out hate speech and all that and
yeah,
take that down. It's only a
sure.
matter of time, but it has to learn. Their algorithm needs to learn. The AI needs to
Yeah.
learn what's hate and what's not. And even though there's studies that have come out that saying that Facebook promotes those high controversial posts, it's because the AI isn't learning that this may not be the best thing for human interaction. You know, like they're
Yeah.
just looking for interaction, period,
you
not
know
what's good
what's
or
funny
bad.
about TikTok? You know what's funny about TikTok in the US and TikTok in China? So in China, they like limit the kids' usage there where they can only watch at certain hours of the day, and
And
they're
they
only
also push
showing
specific type. Yeah.
educational videos, science, like sports, sporting
Engineering.
achievements, engineering. And in the US, we have like fucking idiots dancing on a pole or like
Hey,
twerking or
stripper
eating, you know,
talk is a
like,
good place
yeah.
for us, okay?
It's
Don't
like
diss
it's
on
like
stripper talk. Stripper talk.
it's just it's like God, we are becoming so ridiculous as a society.
Yeah.
I don't know,
Right.
but
Look, I'm if anyone's scared about investing in China, I think it's the only place at the moment with any value. That's where I would be. China. There's some great businesses there you can invest in.
are you
But
a
if not,
Chinese spy? Are you
He's
a
in
no, I'm not.
Australia,
But
so
but
close
I'm just
enough.
going to also roll in some United States opportunities. I think that in the States, you know, like Facebook's really good. There's some other opportunities there, I think, as well. In like MasterCard looks pretty reasonably priced again. Like have a look. It's not too bad. And I think if nothing else, you can always buy the index. But I think Facebook is like one of the best opportunities in the last few years.
Yeah.
So
I agree.
If you couldn't
Yeah.
get
I agree.
Facebook when it first jumped, now is a perfect time to get into it because it will be around for another at least 30 years. It's another.
I gotta say though, the backlash to Facebook stock dropping was so much more than I thought it was gonna be. Like I really thought it was gonna rebound pretty quickly. And I was like, oh, this is just an overreaction. And there's a lot of Facebook hate. I'm actually really surprised how many people think it's over for Facebook.
But I just think, yeah, you're right. I just think they're so naive because I actually think it's more of a business platform than anything.
I think it's just people hoping it's over for Facebook.
Of course,
You know?
they love the drama of it all. Like
Because they don't like Mark Zuckerberg. People don't like. He's not a very likable guy.
It's themselves. They don't like how they show up on the platform. Wherever you go, there you are. They'll go to Telegram and be the same wankers that they were on Flip and Facebook. It's not the platform's fault. It's them. And then
People hate successful people because they're
Yeah.
it's a jealousy.
Definitely. Of course. Yeah. So anyway, I think these are the types of questions you've got to ask yourself before you go into a big position. There's this before I've got to get to this other thing, but this is really interesting for people who are serious about investing. Ready? There's this book out there called The Signal Through the Noise. But what you've got to learn to do is look for signals and not noise. And that's why if you go to the numbers and you go and do your research on the company and you look for signals and you forget about the noise, that's how you make a shit ton of money. And too many people, I'd say 99% of them, are just noise. VIE structure, fucking Russian war, blah, blah, blah. That's noise. There is companies out there producing shit tons of cash that you can get for cheap, and that's how you become wealthy. So learn to follow the signal, not the noise.
Especially on days when the market drops like 4%. You know,
Totally.
it's like
Russian oil embargoes, shit like that. Yeah, definitely.
Those days, I keep throwing money into like my index and I just keep dropping money.
Good.
Smart plays.
And then
All
right, man. Thanks a lot. Thanks
for having me again. I love. I wish I could just keep talking on here with you guys, but I'll see you next week.
You have to go do another masterclass on teaching your people how to make money and that, and you're 40, 50,000 people in that group.
No, I have to go do that now.
Anyway,
but Tony's got a good question there. What's your thoughts on oil? See you later.
Lloyd's bouncing at the top question.
Right.
Smart man.
Yeah.
We're not going anywhere yet. We still got about 10 minutes. Lloyd's just because he's a businessman, like he said, he's running two successful businesses, and he has to. One of them is a masterclass where he helps people become millionaire investing through micro investing. And I will be updating the links in the show notes so that you guys can try and join over. But if you want, go over to LloydJRoss.com. That's his website. and you guys too can invest in that. Get his book called Money Grows on Trees. Subscribe to his podcast, Money Grows on Trees, the podcast. It's amazing. I promise you, it's one of the best things. Make sure, if you're subscribing on Apple, there's 2 of them. Make sure you see the most recent episode that dropped, with the date being the closest one to you. It drops every Monday, so that's really important to be checking out. But on Spotify, there's only one. We're working on getting the old one removed in our archive so that doesn't show up anymore. But Tony, let's go with we have some questions here. What Chinese stock? Oh no, that's for Lloyd. We'll save that for next week. What's your thought on oil?
Oil is very cyclical. It's not something you're going to stay invested in forever. It's not like a buy and hold. I mean, we just saw, was it maybe a year or 2 ago, oil was trading negative per barrel. I mean, we're looking at like, what was it, like negative $30 per barrel? It was like ridiculous.
Yeah.
There was essentially so much oil that no one wanted to buy it. And then now it's like, we can't have enough oil. Oil is $150 a barrel. Oh my God, that's the end of the world. We need more oil. So, and oil prices are skyrocketing. So it's one of those things where you have to kind of invest with the momentum of what's happening and get in and out. It's not something you're going to stay in. You could probably pull up a chart of I don't know, what is it, USO, like an oil. I think it's USO ETF.
Give me a second here.
It's like an oil ETF.
Give me a second. Oil.
United States Oil.
F.
Yeah, and it's actually down like 86% all time. So, and this year it's up 72%.
So USO.
So it's not some, yeah. USO is United States Oil ETF.
Oh, pulling it up. Right now it's trading at 75.4.
Yeah, but if you click on like the all-time returns of that fund, it's down like
86%.
Yeah. Yeah.
I'll bring it up on screen for people to see. Give me a second here. My camera's kind of in the way. There we go. So this is
like you can look at like Exxon or Chevron or some of the other big oil companies. But the thing to remember too is even these oil companies are shifting away from oil. They're investing into renewable energies and solar power and wind, and they're all like changing their strategy in preparation for the future. Could be a very long time, but if you're investing in an individual company like Exxon, like I said, or maybe like Chevron or something like that, then they pay good dividends. I think Exxon pays a pretty good dividend. It's like a 4.5% yield, if I remember correctly. So, if you're in it for dividend income, that's pretty good. But I just think it's a cyclical business. I wouldn't invest in an ETF for this. I would just pick like a really profitable company like Exxon. We could probably pull up Exxon charts. I'm not really sure what they're trading at right now, but
give me a second.
Exxon.
82.79.
Yeah.
They're positive over 2,000%.
Yeah.
max
They've had a great year, but over the last 5 years, if you look at them, they're pretty flat. I mean, it's gained 1%, 1.5% in the last 5 years.
In the last 5 years, they've been flat.
That's what I mean. They had huge gains. If you look at their chart, all time, it's ridiculous. It's like 21,000%. But if you also go back to 2007, they've basically done nothing since then. I mean, it's been 14, 15 years, and they're just up and down, up and down, up and down. Because oil's cyclical. Oil is just the price of oil is constantly changing. So, based on what's happening in the economy. So, like I said, if you want to invest in these companies for dividends, for passive income, then that's not a bad idea. But if you're looking for like massive growth, you're probably not going to see it unless for some reason oil just keeps skyrocketing and we become more dependent on oil again. But I don't think that's going to happen. It seems like we're kind of trending away from that, and even these companies know that they're investing in more renewable energy as well. So I think it's going to be a long shift away. Obviously, we're not going to just not need oil, in the next 5 years. It's going to take a long time. But I don't know. I don't invest in sectors. It's just too risky. Sectors are too up and down and cyclical with what's happening with the economy. I just stick with the S&P 500 or VTI or market indexes like that. So, but I wouldn't. Like I said, my final point is I wouldn't begrudge or be against anybody buying these companies if they want to make some dividend income, because they are really solid, dependable dividend paying stocks. I mean, some of these oil companies are in the dividend aristocrats, meaning they've paid for like 25 years in a row without a cut. So that's pretty impressive.
That is impressive.
Yeah.
We're coming up to the end of the show. Do you have any final notes, or do you want to just jump into where people can find you?
No, I think that's it. Stock Bros podcast. Check out my course. It's doing really well. A lot of good feedback. And for those of you that actually bought my course in the past, I'm adding more chapters soon about things that are happening right now. And there's going to be a lot more resources to it. So if you bought it, anytime I add something to it, you're going to get automatically free. So,
nice. That's always good.
Yeah.
And
so
yeah, I'm gonna shout out Lloyd because he's not here to do it. But again, his podcast called Money Grows on Trees. I can tell you right now, 100%, what he talks about in the podcast and his book that he sells will help you create a side hustle so that you can use that money to invest, and it will increase your financial IQ, as well as the Stock Bros podcast. That's a no-brainer, obviously, in this one as well. But Lloyd's podcast is helping you create an income that you can have on the side that then you can use to invest in the companies or the sectors or the ETFs that we have suggested on this podcast, because they're proven over long term, and it's less guesswork, and it's just easy money to grow over long term. And of course, you can find me over at Invest in Yourself, the digital entrepreneur podcast, where I interview digital entrepreneurs, 6-7 figure entrepreneurs who have made their living online. So they started out as a side hustle, and now it's their main business. So you guys can check out that. And if you're looking to start a podcast, go to feelbetterinc.com. I'll be more than happy to give you guys some advice on starting a podcast and that. With that said, ladies and gentlemen, I want to thank you again. Look at all this. We got thank guys, great discussion,
yes.
Great show. Thank you guys, great show. Love seeing this. How's the baby? Oh yeah, Tony, how's the baby?
He's good. He's doing great. He's 9 weeks old now. Crazy how fast that went by. I remember joining the podcast briefly when we were in the hospital.
Yes, you did, and it was nice to see.
Yesterday. It seems like yesterday.
It's insane. Ladies and gentlemen, that's us for Stock Dirty to Me. We hope you enjoyed the show. Make sure you like and subscribe to us on Spotify and Apple. Help us get those numbers up so more people can learn about investing and becoming wiser. And with that, smart investing. We need a sign off. We have to figure out a sign off. Smart investing.
We'll do a poll. We'll do a poll.
Yeah. Well, since the poll worked last time, making this great name, we'll do a poll with how we're going to sign off. But guys, thank you again for showing up, and have a great day.